You're tuned into Vegas Realty Check. Big show today. Treasury Secretary Scott Bessent says that the housing market's in a recession, but mortgage rates are finally dropping. Could this be a shift that the buyers have been waiting for? We're going to talk about disappearing first-time home buyers, the luxury boom from Summerlin to McDonald Highlands, and why escrows are falling through as affordability slides. So let's dive in. This is Vegas Realty Check. Hey, Courtney, welcome back.
Hi.
Hi, how's your week been?
It has been good. Everything's been good. Glad to be back.
All right, so you're going to open us up with some loan programs and some financial stuff, right?
Yeah, absolutely. So clearly we've had some interesting things going on, especially in the lending world. The government has been shut down.
Yes.
We're hoping for that to change here in the next couple of days.
Sounds like we had a vote that might make that happen, so that sounds good.
Especially
Promising.
if you're flying. Let's get this state country back open.
Yes.
So clearly with a lot of volatility and things going on, the mortgage rates, I don't know if it's a good thing clearly coming down is a great thing for everybody, but I always feel like right now in the last 2, 3, 4 years, coming down, when the rates are coming down, it means something else crazy is going on.
Yeah, that kind of has been the trend. And I would love to see them just come down naturally, but also we need them lower. I don't think they're coming down quite enough, but they are dropping, so that's good.
No, and right now we are sitting, which I think we were all hoping and been talking about, seeing the rates in the high 5s, low 6s, and that's where we are right now.
Yeah.
We're seeing on a national average, of course, based on credit score, all those other things, it could be a little bit lower, a little bit higher, but we're at a 30-year conventional sitting right around a 6.25.
Okay.
And we're looking on 30-year FHA, VA, right around a 5.75. So I guess we're seeing what we had hoped for. It's just not in the way we hoped.
Right. I seen a news article yesterday. I thought it was a joke, but I did fact check it, and this is absolutely true, that there's a proposal now for a 50-year mortgage. What do you think about that?
Oh, boy. I did see that actually yesterday as well.
Yeah.
So, if you're just trying to own a house and have a really low payment,
yeah,
great, but if you really look at the amount of interest that goes into paying a 30-year loan,
yeah,
you basically almost pay for the house twice.
Exactly.
So obviously, we talk about owning real estate and what the benefits are, but if someone wants to own a house and they want a 50-year loan, great, but you're essentially buying a house almost 3 times at that point.
Yeah.
And I just, at some point it's like, where does that not make sense?
Yeah. And I was looking at some scenarios of what a payment would be on a 50-year versus a 30-year. And unless there's some type of structure to make that look better, I don't think it makes much sense. Like it was like a $200 less payment, where if that payment was half, then I could see that making sense. Affordability. We need to find a way to get the millennials, Gen Xers that are now starting to grow up. We need a way to make them homeowners. And right now, the prices and the rates, it's not working for them. So we need a way to make them be able to buy a home. So I'm not sure if it's the solution, but hopefully there's a bigger plan of where that can make sense to make that happen.
And I think that's where, it keeps coming up that there's all these temporary fixes because there's all these outside problems, and then they're trying to find these little fixes that aren't really fixing anything.
Yeah.
It's kind of just like a temporary Band-Aid to try to see what might work without actually fixing the bigger picture.
Right. Treasury Secretary Scott Bessent had some things to say on an interview he did recently, and he said our housing market's going into a recession, and Fed is to blame. It's due to high interest rates. Definitely. What are your thoughts on that?
Always blame the feds. No,
Always
I'm just
blame
kidding.
The Fed. If all else fails, blame the Fed. That's a good strategy.
I really think, and this is not new news, I really think at this point there is a perfect storm of high prices for homes and high interest rates.
Right.
Back in 08, 09, obviously there was a million other issues that were going on, but the houses were much lower in price.
Right.
So it became where people could buy that were able to buy. Now it's people literally, obviously not everybody, people that have money have money.
Right.
But it's the people that are in the middle class or the lower class that can't afford it.
Right. And they say that, I've heard plenty of arguments out there about rates in the 3% are not normal. And that's not where we need to be because that's not a normal market, that the rates where they are right now is a normal market. But we still come back, that doesn't solve a problem. The problem we have right now is due to inflation, due to growth. And there's growth in everything. We have higher home prices. I don't think that's going to go backwards. I don't think, when you bought a home in the 50s for $70,000, did that ever get cheaper? It never did.
No.
It only goes up over time. So we can't have high prices and high rates. When homes were 100,000, you could have rates at 18%, which there was a time in the 80s where that was true. But you can't have them. You can't have high rates where the prices are right now. It just makes it unaffordable.
The problem is that the middle class and lower class, they can't catch up because it's the perfect storm of if you have debt, you have debts on credit cards. Those rates now are around 20%.
Yeah.
So what they're trying to just make ends meet, and then also the minimum wage, the average wage hasn't caught up to what the cost is now.
Yeah.
So it's the perfect storm of people not being able to afford things.
Right. And that's another box to open, I guess, because the average wage, to be able to afford things in this economy, you need to make more money. However, the businesses are struggling in paying those higher wages and keeping their businesses profitable by paying those higher wages. So there's a lot. There's a trickle down effect that's happening everywhere that we need a solution to. I think the solution is lower rates, and that's just my 2 cents on the matter.
And 100%, but that's why you also see a lot of large companies starting to integrate AI so they can start weeding out and get rid of those, hourly employees. And there's just a lot going on that's definitely, everyone sees it. I think everyone's kind of just...
Yeah, it's a shift. There's a shift going on everywhere in the world right now, and it's how are we going to catch up to that? So, speaking of shifts, how are these shifts going to be showing up in our market, and how are they showing up right now? We're going to take a look at that next, guys. Stay tuned. We'll be right back.
Hey Vegas! Celebrate every day in style at the Composer's Room. We bring you non-stop entertainment infused with the vibrant spirit of Las Vegas. Our tavern serves the best drinks in town. Whether you're a cocktail connoisseur or a beer buff, our bartenders got you covered. And let's not forget about the food. Our culinary delights are sure to tantalize your taste buds. Come for the entertainment and stay for the food. Reserve your visit to the Composer's Room today and start celebrating Las Vegas our way.
Looking for a night out that's pure Vegas? Welcome to Jimmy Kimmel's Comedy Club, voted best comedy club in Las Vegas. Located at the Link Promenade, just steps from the High Roller, it's your ticket to big laughs from top comics handpicked by Jimmy Kimmel himself. No two shows are alike. Every night's a headliner, and every seat's a great one. Get your laughs at the best. Jimmy Kimmel's Comedy Club, only in Vegas, only at the Link.
Every home has a story. What's yours? From your first home to your forever home, Trish Williams helps you write each chapter. Real estate is about the life you build. Hire Trish to be part of your story. Trish Williams, Keller Williams Realty. License S.01755530, call 702-308-2878. Start your next chapter today.
Welcome back, and we are getting into this segment to talk about the tale of two worlds of first-time home buyers are declining, yet luxury seems to be improving. What's your thoughts about that, Courtney?
I think it is the old saying that people with money make more money.
The rich are getting richer.
The rich are getting richer. So, and once you have the money and you know how to invest the money, it's a trickle effect of a continuation of investing and figuring it out. So I think that, especially in this market, that's not surprising to me at all.
Yeah, it's exactly what we were talking about in our last segment. First-time home buyers right now are at a record low, down by 21%. Yet cash buyers are at a record high, up 26%. So that's a pretty huge change right there. The median age, you've talked about this in the past on our shows, of first-time home buyers.
It used to be much younger years ago.
Yeah, well, I bought my first home at 18, and I had many friends when I was that age that bought homes within that few years. And now we're looking at a median age of first-timers at 40%, at 40 years old.
40. So I think, obviously, I think times have changed. I think people used to have kids much younger, and it's a little bit different now as well. But it's the cost of living. It's the rates. It's the home market, the prices.
Yeah.
I'm sure in certain places you probably see people buying homes younger based on affordability. There are certain places in the Midwest and other places that the cost of a home is much lower.
Yeah. Well, when my daughter wanted her first apartment, she wanted to get an apartment, and she wanted me to co-sign the lease for her. And I was like, I'm not co-signing for an apartment because I'm not going to be obligated to pay someone else's rent. Like, that's stupid. So, at the same time, it was the same cost to purchase. And where it's the same cost, purchasing's a no-brainer. But where the cost is substantially different, that makes it very challenging.
And there's also been a lot of changes, even on the first-time homebuyer programs. A lot of people that don't have a down payment saved, and I'm not saying everybody, but a lot of people that don't necessarily have a down payment saved that want to look at down payment assistance programs, a lot of them may have a lot of debt or a lot of things that they're trying to catch up on that hinder us from being able to approve them for a loan as well. Right. So I think it's just that perfect mix of them not being able to necessarily afford getting into a house here.
Right.
And there are programs where you can put as little as 3.5% down.
Yeah, FHA's 3.5%.
Absolutely.
There's a first-time home buyer conventional that's 3%.
Absolutely. And I think it's just really looking at the affordability. But the people that have money in this market are smart, and they're multiplying it by buying and selling and doing things to continue to make more money.
Yeah. Repeat buyers right now, on average, are putting an average of 23% down on those repeat or step-up homes that they're buying. And 54% are used from the sale of their previous home. So that is, that's where the money's coming from. They're cashing in on the equity from the homes that they already had.
And they're trying to keep their payments lower, because with the rates the way they are, the payment would be astronomical based on what price point they're looking at too.
Yep.
So,
and in Las Vegas, our luxury market, what we consider luxury is $750,000 to $2 million. When you get over $2 million, we call that ultra luxury.
Ultra luxury.
So $750,000 to $2 million is what's classified basically as luxury income. And homes over $1 million have doubled since 2020 in the Valley. So there's double the amount of homes that are over $1 million. And
I wonder if they double just because the houses are getting so much more expensive, right?
Exactly. Well, it's the prices have gone up substantially from 2019 to now. So that's where those prices have gotten higher. And I mean, I don't know if you've walked into a $1 million home recently, and I have, and
they're what they used to be, right?
They're nice, but they're basic.
Of course, it's just not 5-10 years ago when you thought of $1 million here. Yeah. Obviously, $1 million in California looks like nothing. Right?
Yeah. Well, I used to think $1 million would get you like this MTV pad where you're just like it's just this incredible house, and you walk in and you're like, this is kind of a normal house.
Now you're like, right?
Yeah, I mean, it's nice. I'm not saying they're not nice, but they're just
it's
different.
Just not what you in your mind would have thought 5 years ago $1 million home would have looked like.
Exactly. So that has changed substantially. And then our top luxury areas in the valley. This is no big surprise to many people that live here, but just for purposes, we have Summerlin. Summerlin's always a big draw.
Beautiful. Summit Club.
Summit Club, yep. The Ridges, Red Rock Country Club is still popular. That's an older neighborhood, but still popular.
Always.
Yeah, Summit Club. And then in Henderson, you have McDonald Highlands, Askaya, Anthem Country Club.
So many beautiful new builds, especially Sky is incredible.
Yeah, huge, very popular areas there for luxury. And then there's also there's plenty of little pockets of luxury communities throughout the valley as well, like Legacy Golf Club, still pretty. Legacy, Grand Legacy is still
Southern Highlands
pretty estate. Southern Highlands, yep, that was on the list. And Spanish Trail. Queensridge
is beautiful.
Queensridge is
I love
absolutely beautiful.
It's
And
really
there's some high rises in Queensridge. And on that note, high rises in Q3, we broke some more records here in luxury on luxury high rises.
I think there was the Waldorf was the highest set at, what was it, 9.5 million?
And 933,000, so almost 1 million, but it was at $586 per square foot, which is an all-time record-breaking high. Sells 119 units, which was the lowest since Q2 of 2020 in luxury high-rise sales. But even though it was the lowest in units, we hit the highest number. And you know what? The average sale was 933,431.
It was at the Waldorf. I think the highest sale was 9.5 million.
9.5 million. Absolutely right. The penthouse at the Waldorf was 9.5 million. And added into that is we talked about Four Seasons here. The Four Seasons high rises. They're already 70% sold out,
when
and
is
those
that
numbers hit these records.
Done.
2027 is the anticipated finalization or opening date of those high rises. So these luxury penthouses and high rises are definitely making some trends here in the valley, and they have a lot more draw to them than I would have imagined.
I think it's starting to become more, not that it hasn't been a city, but it's getting more of like that Los Angeles type, like high rises
New York,
going on.
Los Angeles,
We're becoming a bigger city.
Right. And Vegas is never boring on the market side, and we have more market stuff coming up for you next, so stay tuned.
Hey Vegas! Celebrate every day in style at the Composer's Room. We bring you non-stop entertainment infused with the vibrant spirit of Las Vegas. Our tavern serves the best drinks in town. Whether you're a cocktail connoisseur or a beer buff, our bartenders got you covered. And let's not forget about the food. Our culinary delights are sure to tantalize your taste buds. Come for the entertainment and stay for the food. Reserve your visit to the Composer's Room today and start celebrating Las Vegas our way.
Looking for a night out that's pure Vegas? Welcome to Jimmy Kimmel's Comedy Club, voted best comedy club in Las Vegas. Located at the Link Promenade, just steps from the High Roller, it's your ticket to big laughs from top comics handpicked by Jimmy Kimmel himself. No two shows are alike. Every night's a headliner, and every seat's a great one. Get your laughs at the best. Jimmy Kimmel's Comedy Club, only in Vegas, only at the Link.
Every home has a story. What's yours? From your first home to your forever home, Trish Williams helps you write each chapter. Real estate is about the life you build. Hire Trish to be part of your story. Trish Williams, Keller Williams Realty. License S.01755530, call 702-308-2878. Start your next chapter today.
Welcome back, Vegas, and we're here back with more on the market. What's going on here in the real estate market? And escrow cancellations are what's not happening here, are not going well here in the market, because those have 19.4% of homes in Las Vegas that went into escrow fell through. And what does that mean? What is that? What happens?
In my personal lending opinion, I think a lot of people do just from being in this industry, I think a lot of people don't do a proper pre-approval like they should half the
Right.
time. Not that there's not so many other factors, but just being in this industry, I've seen people tell me they've had pre-approvals, and then if they want a second pre-approval, when I ask for documents, they don't have them. They can't find. And I'm like,
Yeah.
how did you get a pre-approval before? And they're like, oh, they just asked for my bank account.
So yes, there's a huge difference which
crazy.
people don't like realize between pre-approvals and pre-qualification.
Yeah.
A pre-qualification is where they're like, how much money do you make? How much this, that? You just tell them a bunch of things and they say, you're qualified for this much. That has, if they haven't seen your bank statements, they haven't seen your check stubs,
credit.
they haven't seen anything, you cannot take that to the bank. And I highly do not advise that you go into escrow based off those
No,
terms.
I think there's a lot of, people being lazy, not doing their due diligence on a lot of different fronts lately. But for sure at some point the lending side, because you want to just make sure things are good before you go into escrow. There's a lot of things that can happen. Clients can lose money.
Yeah.
And we've all been in those weird situations where things have popped up.
Yeah.
And I think there's also too a lot more people that are self-employed or trying to hide things. So, but I don't necessarily think that has a huge.
It's a portion of it
It
because
is.
I've had from the listing side of things, I've had a couple times in this last year where I had a listing, the buyer came in, went into contract, and that first 3 days where they talk to the lender and they get their loan estimate and look at the payment, they say, I don't want to do that. And I'm like, how is this the first time you're seeing the payment? Like, this should be a conversation before you start shopping.
I think communication's changed a lot in the last few years too.
Yeah.
I think people aren't as hands-on as they need to be.
Yeah.
Customer service is not like it used to be.
Well, people get so lazy of
Yeah.
letting the computer do everything because
Correct.
it's so easy. You plug it in and it's like, I analyze this and I do this and I pop out a pre-approval letter and everything's good. Like, computer handled everything, and you forget about the part of like, I need to talk to this person and say that they're okay with what's going on
Of
here.
course.
Like, they feel comfortable with this payment, that they understand what they're getting into, and that part, we're having a huge gap in that.
Disconnect.
A huge disconnect.
And I
yeah.
think too, with the market being as volatile as it is, that I think buyers are probably asking for a lot more because there's a lot more homes on the market. So they think they have the upper hand. They want all these seller concessions. They want to keep this or do this, right?
And sellers, I mean, we were in a market for so long where the home inspection, unless there was like, if the house is falling apart, that's a different story, always. But we were in a market for so long where the home inspection, if there wasn't anything that was like major or shocking, don't worry about it. The buyers are
Like,
still
we're
going to
moving.
follow through. We're
Yeah.
moving on. We're
Yeah.
going to work through it. And now it's like, okay, that faucet's loose. The buyer's going to cancel. Like, what?
I think the expectations, because a buyer thinks they have such the upper hand right now.
yeah.
I mean, listen, there's been markets where the seller was asking $50,000 over and getting it. So
Yeah.
I think there's just been a market shift where if someone qualifies now, they're
They're like, I'm the only chance you
Yeah.
have. You better do everything. I want new paint, new carpet, brand new
and
roof.
being ridiculous too.
Yeah, no, some of it is ridiculous. I have seen the longest repairs request that I have seen in my whole career this year.
Really?
So it is.
Was it like a bunch of things that were just
They basically want you to turn whatever year that home is into a brand new home. I want everything brand new. I want it all. It is insane. Buyers are super fussy right now, and hence the cancellations. If you don't do what they want, they're like, okay, well, I'm walking. Good luck to you. And a lot of times it doesn't work out good for the sellers in this market because once you
Yeah.
get a buyer in escrow, you really want to keep them in escrow if there's any way possible. And another thing here about Las Vegas is we are the 11th least affordable housing market in the U.S. Now, at least we're not number one, right? That's California. We all know that.
Or New York.
Or New York.
Yeah.
Yeah. So we're not number one. We're number 11. There's a lot of other cities beating us in that. So there's 50 states here in the U.S. and us being number 11 is not, I mean, it's not so bad, but it's not so good.
prices have gone up tremendously. If you've lived here even the last 10 years, I've been here since I was younger, since 1996. And I mean, the housing and just the affordability everywhere has gone up. But here you do see it a lot more. I think in Vegas, you're used to higher prices in general, but I do think that living is becoming unaffordable for a lot of people here.
Right. And they're saying that on average right now, it would take 37 years for an average household to save up a 20% down payment on a median home.
Which is crazy. They said what the average income here is about 70,000.
Yeah. Yeah. Well, 70 to 80,000. Yes.
Yeah.
And you need 100, and we talked about this last week. I think it was 120,000.
Yeah.
To afford median home price. So
People are going into debt.
yeah.
And you're seeing it a lot more. You're seeing a lot more people trying to pull out equity in their homes, doing cash out refinances, trying to get second mortgages. The prices are high.
Yeah.
For
Yeah.
everything.
Yeah. High high financing costs, building materials are up. So there's a lot of things that are, playing factors into all of the high prices everywhere. And wage growth isn't growing as fast as everything else. Rent prices are dropping, though.
There's a plus. I love
That's
it.
not great for home buyers. It does not motivate more home buyers. That is never the situation I want to see, but where rent is lower than purchasing. But right now, unfortunately, rent prices are dropping, and that is keeping more people from buying homes because they're seeing the rent prices that are a lot lower and look more appealing than those mortgage
And
prices.
I think they were up so much during COVID that people who moved somewhere during COVID were paying these astronomical places to live.
Oh gosh,
And
they
then
were
I
so
think
high.
they slowly started coming down.
Yeah.
So, I've been saying it's perfect storm for just kind of a strange economy right now.
It is a very strange economy. I still don't. How do you feel about a crash? Do you think we're going? I think we're at the worst of it now. I really
At this point, if I see pigs fly, I don't know that I would blink.
Yeah,
It's been strange.
It has been strange times. So, Courtney, you've been brought so much valuable information to the show. And how do people contact you if they want to get more?
So, sorry. So you can contact me at 702-416-6918, and I'm with Citywide Mortgage.
Yes, and I'm Trish Williams with Keller Williams Realty. You can contact me at 702-308-2878. We are here on Hey Vegas TV Network, so always tune in, watch our show, and all the other great shows they have on this network. This network is really booming, so I advise you highly to check out some of the other shows. They have some great content here. And if you want to connect with us or send us any questions, you can do that at realtycheck.vegas. That connects to our Instagram and everywhere where we're at. So check us out there, and we'll see you next time.